Hello, thank you for joining today's live session with Valkyrie. We'll have Valkyrie as a guest speaker of today's Twitter space, and Ben will be the host tonight, the head of business development of CryptoQuant.
Thanks, Ho-Chan. Firstly, thanks again to the folks at Valkyrie Investments for taking some time to speak with us today about their recent market report and all things on-chain. As Ho-Chan mentioned, I'm the head of BD at CryptoQuant, and our team's been working pretty closely with Valkyrie for on-chain analysis and their recent Bitcoin market research report. I'm sure most of you who are joining the Twitter space are familiar with Valkyrie, probably best known for their Bitcoin futures and mining ETFs, but still, let's get some introductions out of the way. Let's start with Leah, and then we can move on to Josh and Sean also. So Leah, do you want to kick it off? Just provide a quick background, your story, maybe something interesting people don't know about you.
Sure. So first of all, hello, everybody. I'm a co-founder and CEO at Valkyrie. CryptoQuant, you guys are absolutely amazing. Key. As many people on this call probably don't know, and maybe Sean can even speak to her, Key, but we've been working together for quite a while on this report, and it's just been a fantastic partnership. So we're big CQ fans over here at Valkyrie. So you mentioned Valkyrie, so I'll just start us off for anyone from your side of the world that may be new to Valkyrie. So we are a digital asset manager with a series of cryptocurrency trusts, ETFs, and a DeFi hedge fund. Absolutely, we have the Valkyrie Bitcoin futures ETF that launched last year. That was very fun. And then a Bitcoin miners ETF you also mentioned. WAGME, that's been very fun this year, and another one last year. Something fun that people don't know about me. You probably mean something professional, but I'm going to be a bit silly. I love beekeeping and making honey. So I'm pretty sure no one knows that about me except for everybody listening in right now. So I will, without further ado, pass it actually to Sean and Josh. Sean, I'll start with you. And actually, if I can ask you, Sean, can you even speak a little to how we started this report with Key and his team, and then we'll maybe dive right in.
Sure. Yeah, we started this. We started this report as we were preparing new financial instruments and ETFs and building new products and listening to what regulators were saying, and we wanted to take a data-driven approach to what was labeled broadly as market manipulation along the way. And we think that Bitcoin is a very unique asset in that regard because of the ability to look at what's happening on chain, and because of amazing teams like CryptoQuant that are able to visualize that for everybody else.
Great, thanks. And is Josh on the call also?
He is here, yes.
Josh, tell us a little bit about what you've been doing over there at Valkyrie.
Sure. So I started with Valkyrie in January this year. I've used CQ myself prior to January. Love CQ for data. Big data guy in the crypto space, especially on-chain data. So currently I'm the head of research at Valkyrie. And along with Sean, we're just looking to sort of clean up the data area for people who are just getting into crypto and sort of crypto curious and institutional and that sort of thing.
Okay, good stuff. So I've put together some questions and some topics that focus on the report and some others that focus on the ETF side of things. So maybe what I'll do is I'll direct questions to specific folks at Valkyrie. But if you're like, hey, this is a research related question, Josh or you take it, feel free to punt as necessary. So without further ado, I think it would be good just at another high level overview of the report, some of the topics. Leah, this one's for you. What is the general message of the report, and who can we credit at Valkyrie for the underlying research?
Great question. I think we can definitely credit Sean. This has been his baby, and definitely in partnership with your team. And Josh, spoke to this. Sean spoke to this as well. Just to reiterate, I mean, when we started working on this report early last year, the real purpose was exactly that. How can we combat that narrative of market manipulation in light of, assisting research for the SEC, for regulators, and for the general public to approve a Bitcoin ETF? This was back in February of last year. So the entire report was really based on this premise that we wanted to push back and really examine the fundamentals by using the technicals to ensure that everyone understood this is different. 2021 and now 2022 is a different time period than 2017, then 2016, then 2000, all the way through. So from a on-chain analysis perspective, we can see but also the historicity behind it of what was happening that did move the markets in these earlier time periods, whether it was plus token, et cetera. So what I've found very interesting about this report is that ever since we started working on it, it's definitely held up. Whereas we're, finally publishing it now, March 16th, or I guess 17th for you guys, because it's in the morning now. But it's its origin story was exactly that, trying to push back against the narrative that the Bitcoin marketplace is just rampant with market manipulation. And it, therefore shouldn't have an ETF. So obviously we do believe that an ETF, we're very happy that it was approved last year. And we did want to push back against this narrative. But I will, I'll punt it to Sean just a little bit on this one. Sean, maybe could you speak a little bit to the breakdown of the piece? We have, as the beginning part, the on-chain transparency. It goes into Bitcoin in historical context, network adoption, et cetera. But, as you were starting to build out these themes, why did you think about it this way? Why did you want to lay it out this way?
Sure, thanks, Leah. I can give a brief summary of what we came up with for the report, but first thing I have to do again is give a shout out to the CryptoQuant team, because you all were so gracious with your time, effort, and patience, and this report would not look the same, it would not feel the same without your input, because we were able to portray almost every data point that was included in the report. We were able to portray visually and graphically, which makes the report easier to read. As to the report, it takes a deep dive into Bitcoin and how it has matured over the years, as Leah was just saying, and it makes the case why it is ready to be an even bigger part of the global financial system, and why it's ready for even more mainstream financial instruments. There are basically two big sections to the report. The first gives historical context to Bitcoin by diving into the 2018-2019 bear market and walking through that period by breaking down the on-chain metrics involved that help to verify and almost every event that happened during that time, including events where a lot of people would just say, hey, that's market manipulation. But in fact, we can see what's happening on chain. The second part picks up on the heels of that bear market in 2019, because the infrastructural changes that were made in those years were a very important development to allow more parties to enter the market. In my view, this was kind of Bitcoin's moment, a bit like Clark Kent jumping into the phone booth and emerging as Superman, because in 2018 we had retail, and then all of a sudden in 2021 we've seen institutions and even nation state involvement because of the developments in infrastructural progression that occurred in that time period.
Awesome. Thank you, Sean, and congratulations on that report. Really a job well done. So you talked a bit about on-chain data that's in the report. Why would you say, and what value does on-chain data provide that either market data can't provide, or that would be supplementary or complementary to market data?
Well, we feel it is important not only to listen to what investors might want, but how everyone is viewing Bitcoin as an asset, including regulators and lawmakers. And the transparent nature of Bitcoin really helps to address some of the concerns over the years that have, like we said before, broadly been labeled just put a sticker of market manipulation on it. And by that I mean, with on-chain data and analysis is really what allows us the ability to maintain the security of the network, where we have.
Hello again. We'll give some people a few more seconds to join. Classic connection issues, but I also want to give a shout out to Key. Sorry, Key, I didn't see you there last time. How's it going? Do you want to say a few words?
Hi, Ben. It's really an honor to work with you guys. We've been pretty closely working with Valkyrie to write a on-chain report, and it was pretty insightful because I guess it's the first time to combine insights between regulation issues and on-chain flows. For example, we classify KYC and non-KYC exchanges around the world, and it's Bitcoin flows between them. So these kinds of insights, I think it's going to be the first step for on-chain analysis. So I'm pretty sure I recommend to read the report. So it's on Valkyrie's website. So yeah, thanks, guys.
Definitely, yeah. Thank you, Key. Thank you. So let's jump right back in. Sean, you were talking a little bit about how on-chain data is central to the report. Following up on that idea, were there any significant indicators or metrics that kind of stuck out or that you used within the report for market analysis or for Bitcoin derivatives, things of that nature?
Sure, yeah. So what we saw was basically, like Guy was just saying, we dove really deep into the flow of Bitcoin around the chain. So KYC versus non-KYC, and what's happening as more and more, because there's more and more KYC exchanges in the US. So what happens? What the hypothesis is that some of it moves off, some of the Bitcoin will move offshore. Well, it also happened at the same time where CME futures came out, but not everybody can really access futures. And then we had the Bitcoin derivatives markets with the perpetual swap contracts that were kind of revolutionary just in how they're organized. And so we did see Bitcoin flowing from the US to offshore exchanges. And really, I think this is sets up it's a nice signal for US regulators, where something like an ETF would really help to bring Bitcoin, onto shores and into regulated products. And that's really something that's one of the main takeaways of the report that we had.
Yeah, definitely. It seems to be a big move into KYC in general, especially in the United States. Josh, I have a question for you. What is your view on the crypto market and this idea of diminishing decentralization? Do you think that this is something that we're experiencing?
Yeah, so I mean, it depends on your viewpoint. If you're talking in regards to custody, I think custody solutions are exploding in a good way. I think more and more DeFi, everything is available, lending, borrowing. Those are going multi-chain, multi-protocol, multi-everything. So in my view, I don't think we're diminishing decentralization as far as that's concerned. We're certainly seeing maybe fewer centralized exchanges, and maybe we're seeing, merging and acquisitions, if you will, of just generalized exchange activity, I guess you could say. And it's sort of migrating to bigger and bigger players slowly. But I don't really think we're diminishing in decentralization in that regard.
Okay, interesting. Yeah, I think that's positive news all around then. So Leah, what are your views on recent global events, and how do you think that macro considerations have affected the crypto marketplace recently?
Yeah, quite the question, especially in light of the Fed news today. I think that definitely macroeconomic considerations can't be overstated at the moment. And especially if I think in light of, again, when we started this report together back February of last year to where we are today in March. So much has happened. I remember we started it when we were in lockdown. I remember, all of our stories and just seeing how the year has played out from, to your point of regarding macroeconomic developments, or here in the US from regulatory developments. I mean, it's quite a stark difference from last year. And definitely, I think that brings up an important part of this report and the importance of the report, which is, very focused on, again, the historical elements of the Bitcoin marketplace and how originally it was very fundamentally shifted, whether it was, again, the plus token era and how that affected the technicals that then affected price. And it was all rolled up into one until more recently, when you're looking at nation state adoption and everything that's happened, in the past few months, really half a year with El Salvador and other countries, obviously looking at, moving in a similar thread. So maybe I'll toss it to my much smarter colleagues with Josh and Sean. Maybe Josh, I'll tap you first. I mean, what's your thoughts? What do you think has been maybe the largest macroeconomic shift that's been positive for the adoption of Bitcoin, and specifically, as we see it in the U.S.?
Yeah, so I think we're seeing more and more people globally decide for themselves that you don't need Bitcoin until you need Bitcoin, and you don't need this decentralized money until you need this decentralized money. And when you do, you really notice it, and you really are impacted significantly by it. Something that immediately comes to mind is obviously Ukraine and everything that's going on there right now. But those people there are, it's life-saving right now for them. It's life-saving for people, even in Russia, who aren't evading sanctions, but they are simply trying to live their life and find a sounder money, right? And Bitcoin for them is that option. So, Bitcoin's always there for you, whether or not you like it or need it or don't need it. It's there for you to use as a tool, right? And more and more people are seeing the need for it in their lives, certainly. Sean, how about you? Any additional factors there?
Yeah, this along the same lines. I don't think anybody will argue that the macro picture has taken on extra levels of complexity in recent years. And it's funny. Josh and I were talking last week, and I asked him if he ever misses the days when the crypto industry didn't attract so much attention. But in many ways, we knew that these days were on the horizon, where we can actually see Bitcoin growing into an asset of crucial not only macroeconomic, but social and even cultural significance, based on its core values. And in a lot of ways, it's helping people, just like Josh was saying.
And to add to that, actually, Key, to bring you back on, if that's okay, just because you're able to represent, the Asian climate and what you're seeing over there. What are your thoughts from what you're seeing and living of the most important macroeconomic developments that you think that we should be looking at?
So what's going on in Asia, basically, I think in terms of regulation, a lot of Asian countries, they're pretty becoming more open to cryptocurrencies. For example, Mr. Yoon, he is gonna be our president soon in South Korea, and he said, our country will allow to do ICO soon in South Korea. It has been banned for like years, but eventually he kind of accept the cryptocurrencies can't be banned in the future, and this allowing doing ICOs is kind of first step for launching ETFs, ETPs, and other cryptocurrency funds in Korea. So I think starting from South Korea, it's Japan will do as well, and other Southeast Asian countries will allow cryptocurrency in the near future. So it's about time. But I'm not sure China will do that. But Japan and South Korea has been pretty conservative, but nowadays their move will be more aggressive in terms of regulation, I think.
Interesting. Yeah, that's pretty welcome news, I think, for the crypto community in South Korea to see, with the recent election, someone who is, what seems to be pretty welcoming to the space. So I think that's positive news. Bringing it back to, I guess, the U.S. market again, and turning it over to Sean, what do you think the implications of Joe Biden's executive order will be on the market? Do we have Sean on still, or should I punt this over to Leah?
That's okay. This is Josh. I can take it up. I think overall, it could have been much worse, right? It could have been crypto's bad, crypto's banned, blah, blah, blah. The stuff that many of us maybe feared or have feared in the past. But it wasn't that. It was definitely a clear attempt to provide regulatory clarity in a time of need, in a time that many digital asset companies are seeking this regulatory clarity in all sorts of ways, custody, staking, taxes, which regulator is going to be knocking at somebody's door tomorrow, that sort of thing. Like we want to be involved with regulators. We want to talk with regulators. We want to be able to provide, sound information like this on-chain analytics stuff, volume information, anything that they need, because many of them are learning this stuff for the first time as well. So if you take it from that angle and say, these people these regulators may not know what's going on, right? So it's our job to help educate, and that's certainly what reports like this helps with in that regard.
Thank you. Let's take some time now to move on from the report and macro considerations. Maybe we can talk a little bit about Valkyrie's ETFs. I'm curious to know, and I'm sure a lot of the listeners are as well, what is involved in launching a Bitcoin futures ETF or a mining ETF? Things move so fast in the crypto space. How long does a process like this take?
Yeah, I'll speak to this. It was not a fast process by any means, but it was a comfortable process in some ways. The regulators were actually surprisingly collaborative and very open to conversations. We put in our first spot Bitcoin ETF application way back in January 22nd of last year, actually. So VanEck applied right after the new year. We applied right on the heels of VanEck, and then a few other issuers trickled in a few months later, and then a huge onslaught of issuers for the spot Bitcoin ETF towards the summer. We then confidentially filed a Bitcoin futures ETF in the 33 Act wrapper in the summer. So we were kind of trying different themes to hit, that quote unquote Bitcoin ETF, and trying to work with the regulators to get to a place that we were both pretty happy with a product. But I think what was interesting is Chairman Gensler signaled pretty explicitly what he wanted. Right. He, in his comments, said CME futures in a 40 Act wrapper. And I think we were lucky that we, having had filed confidentially that Bitcoin futures ETF in a 33 Act wrapper, we could very quickly switch it to a 40 Act wrapper. But it's a very long process if you think about January. But at the same time, for issuers such as the Winklevoss, way back, I believe 2015, a lot of folks have been in this race for a while. But to your point, we have 3 ETFs currently traded, and all of them have been a different process. Obviously, we are still hoping that our Bitcoin spot ETF will get approved one day as well, but our we're not holding our breath right now, unfortunately, although we are still having good conversations to try to get to that holy grail. But in the meantime, you do have the thematics. You have the equity thematics. You have some more playful stuff. I think the Bitcoin Miners ETF is very interesting, and it has a green lens. So 77% of the miners are working with renewable energy. So it's a long process for sure. Not everybody loves the fact that it's a Bitcoin futures ETF. Everybody does talk about the holy grail of spot. But I think little by little, it's getting there. Regulators are warming up. I think that the conversations are very positive, but slow and steady, wins the race. And that's also the purpose behind this research report is just us and everybody else who can provide content, educational content, especially that regulators can read and we can engage with them on. It's gonna take us, all of us in the industry, every single individual, trying to work with Washington to get to a place where they understand that this marketplace is actually mature enough to handle these vehicles. But it is a slower process. I think we need to just keep that in mind. Washington doesn't move quickly, and definitely to your point, not as quickly as crypto, where everything ships in 3 months max.
Yeah, exactly. Washington is maybe even the polar opposite of how fast crypto space moves. So it seems like the regulators are, watching the spot ETF place very closely and looking into it. And obviously to protect investors is probably the main reason that they've been a little bit slower. But what do you think are the main considerations of protecting the investor? Kind of following up on that, what are the regulators worried about, so to speak?
Yeah, I think it's a very good question. If you look at a lot of the statements made, I think that there's the other elements of the industry are very concerning for many of the regulators, including exchanges, and again how they're looking at stable coins, how they're looking at staking, how they're looking at the entire market. And I think it's going to take regulators getting more comfortable with the broader ecosystem before they can approve a Bitcoin ETF, whether we like it or not. So I think it's going to take exchanges registering with the SEC and a couple of other key linchpins to get them more comfortable. So I think that there's still a lot of work to do and a lot of guidance to be had. Probably more regulations down the pike to get on other altcoins in order to get us and Washington to a more comfortable level to approve the spot Bitcoin ETF. But I think we have a little bit of a ways to go, and yeah, I guess just in sum that it really requires the oversight of the broader market, not just Bitcoin. So a lot of us are maxis on the call. I know I came from a maxi background. And it's it's interesting trying to explain the nuances and differences between Bitcoin and other altcoins. And I think those are still the conversations that are being had right now. And at least, that's some of the conversations we're having.
Interesting. I want to just quickly kind of come back to on-chain data and talk a little bit more about on-chain data. Sean, what do you see, and maybe Key can also chime in after, but Sean, what do you see is, the future of Valkyrie's use of on-chain data? What are different things that, you'd like to see in the space?
Sure. I'm definitely very interested to hear what Guy is going to say about this. But I think that as new products and new financial instruments emerge, the way we look at data on chain will change. And so I think that for short-term investors, they look at, for short-term traders, they look more at like derivatives metrics and open interest and funding rates and stuff like that. But for a medium or long-term time horizon, the on-chain data really gives us an idea of what to expect in the coming months and years. And so as more regulated products emerge, I'm really interested to see what new metrics we're able to come up with and think of along the way. And I'm always going to ask this question of Guy. Anytime I see him, I'm going to say, where are we headed on chain? Because I think he has a lot of insight on this.
So as you might know, this report is written for to persuade regulators. So we put a lot of insights about our regulatory issues. For example, exchanges who are doing KYC. The number of KYC exchanges is increasing when you see on-chain data. So basically, KYC Bitcoins is increasing as well. So it's really important to see how many Bitcoins are KYC'd and how many Bitcoins were non-KYC'd. And also, we put some insights about illicit transactions like Plus token. A lot of regulators keep saying, hey, Bitcoin and other cryptocurrencies are used for money laundering, and there are tons of illicit transactions. But what we saw there was that like big scam projects like Plus token, they're they I think they kind of succeeded in turning Bitcoin to fiat a while ago, and after those big scam projects, we a lot of pretty good AML solutions like Chainalysis and Elliptic and others. Those guys and our on-chain providers like us as well. We our technology to track down those illicit transactions is has been evolving a lot. So I think it's time to think for those regulators in US and Korea. They can think, okay, we can track these illicit transactions and we can control all of those money. We can control the Bitcoin by doing KYC and tracking down those illicit transactions. So I think along with those technological improvement, regulations will go forward around the world, not just US and Korea, but also other countries. They will follow the US regulations. So yeah, I recommend to read the report. I'm not gonna mention more detailed insight because you should download the report and read it. I recommend that. Yeah.
Definitely, yeah. I do recommend also everyone read the report. Super interesting. Seems like from what Key you said that we kind of the era of on-chain metrics started with the mining era, understanding electricity costs and things like this, and then exchanges started coming next, understanding flows from that perspective, and we kind of see ourselves now in an institutional space where we have funds being launched by people like Valkyrie and other institutional money heading into Bitcoin, whether it's ETFs, futures, or trusts and holding Bitcoin directly. And maybe even it seems like we're heading into a new era of a regulatory era. So it's interesting to see, and I think the report does focus quite a bit on that because at the end of the day, the report is for everyone, but with a bit of a focus on the regulators as well. So with that in mind, what do you think the key differences are that institutions look for as opposed to retail, or do you think there are considerations when moving into this space, whether trading or investing, are the same or different? Sean, I'll give that one to you.
If Sean's having any connection issues, I could start it off. Sean, just
Sure.
talk whenever you're ready. Okay, cut me off because your brain is much larger. I think that's a really good question, and I think we have some, an interesting vantage point at Valkyrie because we're definitely Bitcoiners first, but are servicing institutional clients, and I think that the buying habits and desires are definitely very different from what you see from retail to institutions, and I think we should break down institutions. There's very different appetite from pensions to sovereign wealth funds to endowments to RIAs, financial advisors, and all the way down. What platforms are looking for, what wires are looking for. I mean, so there's a huge difference. What's been interesting, of course, is that ETFs are fantastic for RIAs and financial advisors, versus you have pensions who are much more comfortable at times with these private trusts, and we have a Bitcoin trust, right? And the trust grantor trust model has been in the market for a while. There's just very specific risk parameters on what you can and can't buy and how you buy it as an institutional money manager versus retail on what we can and can't do, which is much more open and I think much more in alignment with whatever type of trader you are and how you are looking at this asset class, whether you're a hodler of Bitcoin or you're a scalper, which I feel like was much more common in our earlier days of trading. But Josh, Sean, feel free to jump in anytime. Josh, maybe it's a question to you. You've been trading actively for so long now. I mean, how do you feel like the retail trading experience or appetite or even personality has maybe changed over the past however many years you want to add to whatever I'm about to ask?
Sure, yeah. The fact that Bitcoin and crypto in general, digital assets, has grown so rapidly, so quickly, has certainly been an invite for large institutional players, whether it be VC interest. Again, custody is massive with institutional anything. You have to have solid custody, and with crypto and digital assets, you got to figure out what that means to people, what custody means for certain institutions or certain legal entities. Volumes have changed, time of day, trading seasonality has changed a little bit. It's definitely, I want to say less reactive, but that's on some days that's certainly not the case. We still see this connectivity with legacy markets more recently than probably ever before with Bitcoin, and that certainly speaks to this connection with the people who are here now, which are institutional players and players who are trading other assets other than Bitcoin, but treating Bitcoin as something that's within their wheelhouse to do, which is why that correlation probably stands so high. But the retail people are certainly still here. We saw that with with Stonk Mania back in 2021. I don't think retail is necessarily going anywhere, but it's definitely important to understand that institutions can't just sort of jump in head first and hope for the best. They need regulatory framework. They need dot their I's, cross their T's sort of situation before they get involved. But we're slowly seeing that. It seems like every day you see these headlines for custody this, custody that, or some local bank, right, just out of the blue deciding we're going to start doing custody for customers. And any one headline like that maybe isn't that big of a deal, but collectively that's a massive win for crypto for sure.
And building on that kind of differentiation between retail and institutional clients and interest key, how have you seen the evolution of on-chain data, kind of starting with CryptoQuant's client base really being majority, an overwhelming majority of retail clients and customers, to now seeing more, whether it's hedge funds or traditional funds, and banks coming into the space? What would you say the biggest differences are between those two client bases when we're considering on-chain data?
You mean how to classify those two through on-chain data?
Yeah, what are their main concerns and interests in on-chain data, and how are they similar or different?
Oh yeah, I think in most cases, retail traders are more short-term focused, and institutional investors are more long-term. They have more long-term view, relatively. So, things like on-chain indicators like MVRV and some of the indicators to see cyclic bullish top or bottom. Those indicators are pretty popular among institutional investors because they buy and sell Bitcoin just like at least a monthly basis, not daily basis. So I think retail investors, they are focused on market data mostly, not on-chain data, because they for most cases, retail traders, those who actively looking at data, it's likely to, I mean, most of those retail traders are derivative traders. They do futures, so they look at funding rate and open interest and others. So I guess when retail traders are active in exchanges, we can see that through on-chain data. For example, derivative inflows from other exchanges, the average amount of derivative inflows from other exchanges when this the average amount of Bitcoin deposit is increasing, we can say, okay, whales are sending Bitcoins from other exchanges to derivative exchanges to open some long positions. And when this value is decreasing, that means retail investors are more active in derivative exchanges. And when you see this data, when retail traders are active in derivative exchanges, the market is likely to be at top. And when whales are active in derivative exchanges, the market is likely to be on local bottom. You can check out the data on my Twitter feed. I post some images about that. So anyways, I think I want to say, okay, retail traders, you have to focus on on-chain data, and you have to trade your asset more long-term to it's really efficient way to earn more money in terms of risk and reward, because crypto is really volatile these days. It just went up like 10% and went down minus 10% next day, something like that. So like these days, I would say week of distribution or consolidation in a wide range. The best strategy would be, accumulate some Bitcoin through this whole bear market, and then wait for like a few months, and then prepare for the next cycle. Be the best strategy, I think. Don't do like 10x and 20x futures. If you are retail traders, you can't beat the market.
Yeah, it's definitely fascinating to see some of these differences and similarities between the two different bases of investors and traders. I've definitely seen differences as well, working with both sides. And like you said, it's, these institutions are definitely medium and long-term focused. And the retail folks, a lot of them are really using the on-chain data to trade today and right now and for years now even. Whereas some of the institutional folks that we're dealing with are really using the data in order to understand, the investment activity underlying the network before they even think about, trading the asset class, or maybe do a paper trading strategy first to find signals using the data. And a lot of them aren't even actually necessarily trading yet. There's a lot to learn in the institutional space, and the standards are typically quite high. So moving back to the report and the man of the hour, Sean, what does the future hold for these types of reports? Are you going to be, releasing them regularly, or what else can we expect?
Especially if CryptoQuant is willing to put up with us and all of our requests and work with us. That partnership was so crucial to delivering this report in a meaningful way. And I think this has been our main focus of was, it took us a long time to get this report out, but this product and this next progression with an ETF and other products has been really important to us. And so it's now that this is released, it's probably on to the next one.
Good to hear. Yeah, I think likewise we're open to working more, definitely. And it was great to meet all of you. I think this is the first time I've met the team, and it was over Twitter Space, so it's very cool. And just a big thanks again to Valkyrie, to Leah, Sean, Josh, and Key, obviously from our team at CryptoQuant. I guess the last thing I want to say is, and Leah or Sean, if you guys have any last words, feel free to jump in. But how can the folks follow you or get in touch with your team or read the report?
Yes, so the report is published on our website, valkyrieinvest.com, and you can follow any of us that are here right now on Twitter, and yeah, that's the main ways to get in touch with us and to view any of our other offerings.
And just putting a note out there, since I know that we have a good secret photo of me, Sean, and Key at the Bitcoin conference last year. Sean, by the way, is a very tall human and makes Key and I look very, very small in the photo. But a lot of the Valkyrie members will also be at the Bitcoin conference. So for everybody here, if they're going to go, please stop by the booth. We would love if you say hi. And I think Sean covered the rest of the stuff, but it is always fun to meet up with people in real life too.
Definitely, yeah. Look forward to seeing everyone at Bitcoin 2022 in Miami. And thanks again. Have a great day, everyone. Take care.
Thanks, guys.
Thank
Thank
you.
you, everybody.
Thank you.